I can't stress this enough. It's not about the rate change itself. The 25 basis point cut was fully baked in, and in fact, the market did not care about it at all. Instead, it cared about what Powell ended up saying during the press conferences. This is how a central banker tells you to recalibrate your expectations. This is forward guidance.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
The market heading into this FOMC was pricing a 95% chance of a December cut. Powell thought, no, that's not what it should be, based on the discussion that they obviously had during the FOMC meeting. So he addressed it during the press conference, and he said it loud and clear.
And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Now, how does this matter for us traders? See, rate cuts are generally bearish for a currency. Now, what happens when the market, which was convinced it was getting another cut in December, has to suddenly price that out? Well, it needs to recalibrate its expectations. And that currency on that ends up strengthening. Right now, since the FOMC meeting, the market is pricing at 65% of a rate cut in December, down from 95%. That was reflected in dollar strength during the event itself. But that's not enough. Powell was saying
it's not to be seen as a foregone conclusion. In fact, far from it. Far from it.
Doesn't sound like a 65% chance. It means more like a 35, I would say. So there's more work to do here to recalibrate those expectations. And more so, you also mentioned that if the government shutdown continues, that will require them to be cautious on cuts.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decision.
Yeah. So in terms of how it might affect December, it's really hard to say. December's, the meeting's, I guess, 6 weeks away. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving.
And cautious in this context means that they won't be in a hurry to cut rates. So we now have this context where a rate cut in December is not the base case anymore. And if the government shutdown continues, the Fed will not cut. So every day that goes by without the Federal Reserve being able to see the data because of the shutdown is a day that the market needs to think, oh, a December rate cut is becoming less and less likely. So this brings us to the view ahead. It's bullish for the dollar. And you know why now. The 25 basis cut is not what matters. It's the forward guidance. It's what happens next that matters. Because remember, markets move on expectations. It doesn't matter that the Fed cut rates yesterday. What matters is that they said they may not cut rates further, at least for now. And that's what really matters. Now, can this trade not work? Well, sure, anything can happen. What we can do is just trade the probabilities. Right now, the market is giving us this opportunity, so we take it. If it ends up being wrong, we move to the next opportunity. Don't get yourself attached to a view. Be objective. If the market proves us wrong on this trade, it's okay. We'll catch the next one.